Good evening, everyone. Two powerful forces combined today to make already jittery investors even more nervous, sparking a big sell-off in the markets. One trigger, another sharp drop in the price of oil. The other, an act of brutality that rattled investors in two countries and around the globe. A Canadian soldier was gunned down outside of a war memorial in that country's capital today. That was followed by heavy gunfire inside Canada's parliament by what appears to be a lone gunman who was shot and killed by police. The motive, unknown. The identity of the shooter, unclear.
What was clear, especially after the U.S. Embassy was locked down, was that investors were rattled. Volatility spiked and early market gains were wiped out, sending stocks tumbling. At the close, the Dow was down 153 points. The Nasdaq ended 36 points lower. And just one day after its biggest gain of the year, the S&P 500 fell 14. After remaining stable for a few days, oil prices fell sharply again today, down nearly $2 a barrel to close at the lowest level since June of 2012. Bob Bazzani has more on today's sell-off in stocks and oil from the floor of the New York Stock Exchange.
Stocks started the day mixed, but began moving lower about noon Eastern time on two developments. First, the Canadian shooting incident was a source of considerable confusion midday, as it wasn't clear how many gunmen were involved or what the motives were. But lone wolf-type attacks are a source of concern and can affect market psychology.
Trying to disrupt average life by taking shots at people and, running down with cars. That reintroduced the idea of risk to the market.
A second development also weighed on the markets midday. Oil has renewed its decline, which was a significant part of the reason the markets dropped last week. The catalyst today occurred at 10:30 a.m. Eastern time when the Department of Energy reported a big build in oil inventories. West Texas Intermediate crude immediately dropped almost $1. Although it recovered its losses in the next hour, it then dropped again around noon Eastern time. That drop occurred independently of the Canadian headlines coming out at that same time, and it put additional pressure on the market, with energy stocks leading the market down. The problem is simple. There's just too much oil in the world. Although oil dropping is good news for the U.S. economy, the decline in oil has become a proxy for deflation and slowing global demand in general. And so it's been viewed with some concern. For Nightly Business Report, I'm Bob Bassani at the New York Stock Exchange.
Well, it wasn't just today. Investors have been nervous for weeks, with new figures showing that they pulled out nearly $6 billion from stock funds in the week ending October 15th, as the market skidded on worries about slowing global growth and fears about the spread of Ebola. The Investment Company Institute also says bond funds saw a pullout of $4.5 billion during the same week.
Here to provide some perspective on today's stock market action is Nick Colas. He's Chief Market Strategist with ConvergeX. Nick, the market was higher earlier in the day, but was it just ready to pull back, or were these two instances that we talked about, oil and the shooting in Canada, a real trigger for something?
It absolutely was a day that should have been very quiet. We've had three very strong days after that really strong pullback last week. So as we began the day, it looked like we should be fairly stable. And it was that news out of Canada and then the drop in oil that really sent stocks down towards the end of the day. But it should have been a quiet day.
You know, Nick, we hear from a lot of people market strategists talking about the markets in terms of the fundamentals. And then we have others who talk a lot about the psychology of the markets and the fear factor. It seems that investors are much more sensitive these days to headlines rather than the fundamentals. Is that how you see it?
Yeah, absolutely. There's two reasons for that, and I think both equally important. The first is the Federal Reserve is ending its QE program later this month, and that'll give investors something to worry about as far as what the pace of recovery in the U.S. economy is going to be without that stimulus. The second point is that fear tends to weigh on investors in the way that you've seen over the course of the past couple of weeks. It isn't a problem until it is, and then it's a pretty big one. Fear is a very powerful motivating factor in markets, and we're seeing that right now.
It was 1 week ago today that we were all talking about a correction. The market was down 400 and some odd points that day. The Dow was, at least. Do you think now, in retrospect, that was the bottom for whatever correction we went through?
You know, my perspective is the following. It was a bottom. It's probably not the bottom, but even if it is, it's very important to note that volatility will probably pick up between now and the rest of the year. We're pretty optimistic on stocks, U.S. stocks in particular. We think this is a pretty good economy, everything considered. But volatility has been artificially low. It's going to start going higher.
One thing I noticed today, Nick, was that the utility index was at an all-time high, showing that a lot of investors are putting their money in a safe place. I mean, given that, are you changing your outlook or your investment strategy?
We are not, but you raise a good point. The utilities up 16 or so % on the year, best performing group in the S&P 500, just highlights how important it is to stay diversified in a stock portfolio and overall. A lot of people were bad-mouthing bonds earlier in the year. That proved to be horrible advice. Bonds have done very well, hence the utilities doing very well. Stay diversified through this period of volatility, absolutely.
All right, Nick, thank you very much. Nick Colas with Convergex.